What if there was an
Good evening, everybody. Welcome to another episode of the intraday price action recap. What's going on, man? For those that who don't know who I am, my name is Timothy Lee Rogers Sr., aka Aranya Grande. I just big spot of Habla Espanol, man. Welcome. This is your first time tuning in to Tim's Tidbits. Please allow me to say, welcome. If it's not your first time tuning in to Tim's Tidbits, I still want to say, welcome. But I want to give you a nice hearty, well, thank you for always tuning in to Tim's Tidbits. Like I say, man, my name is Timothy Lee Rogers Sr., aka Aranya Grande. This is the price action recap. This episode of the price action recap is being brought to you by the Smart Money Manuscript, man. Well, Tim, what is the Smart Money Manuscript? The Smart Money Manuscript, can't really see it, like I'm blocking it over there in the corner, right up there in the corner. If you look over there in the corner, it's right there, right over there. It says it's your step-by-step guide to actionable financial insights. What does that mean? Right? What is that? People always use these fancy words that they get, these big, large vocabulary words. The whole thing that means is, right, it's stuff that's going to help you understand how price action works, which allows you to put it into effect in your own personal trading, investing, whatever you choose to do, right? actionable. It's something that you can put to work, put into effect, right? It's going to be everything that I've ever talked about on this YouTube channel in one concise course, if you will, right? I use the air quotes like this, but course, right? Because I ain't no teacher. I ain't nobody teacher, man. I'm not a teacher. I'm just some dude from Fort Lauderdale, Florida, who learned something, and I get on Algo's internet and share my understanding of what I learned. Right? I've learned things from many different people, right? And the most effective thing that I've learned, effective concepts that I've learned when it comes to trading and investing are the ICT concepts. Those are the most effective that I've learned that I can understand. I've learned from many people, right? Many great people, some not so great people, right? But I've learned from all of them. You know what I'm saying? I've learned from all of them. I learned from the great ones. I've learned from the not so great ones. I've learned from people who, I've known more than them, but I still learned some things from them because I'm a sponge. I just like to absorb all the knowledge I can on anything, right? And I give anybody a chance who, if they know something more about a topic than I do, I'm going to listen. I'm not gonna just badger them, say you're dumb. I know more than you. No, we can learn from everybody. So now I make it my job, if you will, to share all I know about the stock market with everybody, right? And every now and then, I put a little price tag on it. Try to make it affordable. Try not to peel your muffin cap back, as they used to say back in the day. But yeah, the smart money manuscript is coming soon, right? It's going to be straight, concise, to the point, digestible nuggets, right? So that you can get a good understanding of each concept or aspect, if you will, of the stock market, right? Smart money manuscript coming soon. For those in the gang, it will be available to you for absolutely free. Those that's not in the gang, and that's for those that have been a part of the gang prior to May 27th, 2025. That's in the Discord where you pay through WAP, right? You pay through WAP and you're in that Discord where you're paying through WAP, and you have to be a part of that community prior to May 27th, 2025. It'll be available for absolutely free, right? I'm not going to block my blessings. Have people in the gang and say, hey, Tim, I want to buy it to support you. Hey, Tim, I want to buy it for my son. Hey, Tim, I want to buy it for my cousin. Hey, Tim, I want to buy it for my friend. I got people reached out and say, hey, I'm going to buy it. So I'm not going to block my blessing. It'll be out there. If you want to, it's going to be $69.99. Why did I pick $69.99? I don't know. They say when you put stuff on sale, you got to have, it's like that weird thing about seeing that number. It's like a 97, 99, 98. It's like something that catch people attention and make them say, hey, it's not $70. I don't know. So I just picked the number. But that's what it's going to be. Now, who in here, man? I see Jim in here. I see Yolanda in here. I see Here to Learn and Share in here. I see Kim. I see Sarah. Hola, Valentine. Uh, I see more numbers than I see names, but them are the names that I see. So that's all I'm going to say. Is there anyone who has any questions about price action? Again, this episode is being brought to you by the Smart Money Manuscript. Right? Coming soon. And that's if WAP can right now. I'm putting everything together. It looked like WAP is going to be able to facilitate the course. And if WAP is able to facilitate the course as it's looking like it will, it'll be $69.99. If WAP can't facilitate the course and I have to try to find another way to host the course, like through Teachable or all them different things there, yeah, the price gonna have to go up. Why? Because that stuff is freaking expensive to host a course. You know, they charge you these crazy amounts of money per month. They charge you like anywhere from like 60, $70 a month on throughout the things. You got to pay like $67, $60 or $70 a month. And that's if you do it on an annual subscription, right? So thinking like $60 times 12, and you know what I'm saying, throughout forever. So it's like you got to pay this fee, you know, to host it. If I got to do all that, then yeah. Because I don't want to do it through YouTube, because, you know, when you do stuff through YouTube, people can, you know, everybody ain't honest. Because once the people get the links, then they could just share the links out. And if people is paying for this, I don't want people to be able to just share the links out. And then, you know, yeah, y'all know how they go. Y'all know how they go. Now, did Price do anything this week that just caught you by surprise? Right? Did Price do anything this week that just caught you by surprise? Let's go here. 16, 17, 18, and 20. Those are our gaps, our opening gaps for the week. And then I'm going to turn off the TDA. Let's go to a daily chart. I'm going to go to a daily chart real quick. Anybody did, oh, I'll be forgetting to do this right here. All right. I'm going to copy the link to the Zoom. I'm going to paste it in the chat. If you have any questions, feel free to click on the link to the Zoom there and pull up in the Zoom channel and ask away. Feel free to pull up, say, hey, Tim, I have a question. Right? Pull up, unmute, say, hey, Tim, got a question. Price did this when I expected it to do that. Right? Or, hey, I just got something I want to ask, because the chat and everything is here. That's the YouTube chat is here. The Zoom, I don't have the Zoom chat open, right? But the Zoom is over here. The YouTube chat is here. And I'm looking at this screen right here. So I can't see what's going on over there, right? And that's why a lot of times I keep glancing back, looking back to see what's going on. But I'm going to be focusing over here. So if you got a question, just pop up, unmute, and say, hey, Tim, I got a question. All right. Now do me a favor. Don't pop up in the Zoom and then unmute like some people be doing. I ain't gonna call no names, but they unmute and just be in the background talking. And I'd be like, hey, can you mute? And they just be talking, you know what I'm saying? They be done laid the phone in they purse somewhere, and they be, you know, they be at soccer practice and be, you know what I'm saying, talking to people about, you know, the little canvases and cupcakes and all kind of stuff like that. But I ain't gonna call no names. I ain't call no names, you know what I'm saying? But, you know, feel free to just unmute and ask a question if you want. But if you come into Zoom, don't just unmute and put us in, lay us down in the car and be, you know what I'm saying, talking to people on the outside of your vehicle real loud. You know what I'm saying? Just don't do that, right? Just don't do that. Just don't do that. Let's look at the weekly chart, right? Where did that go? Am I not on the right screen? What happened? What's okay? I'm like, man, what's going on? All right, so this is the weekly chart, right? This is our weekly chart. So based off of our weekly chart, right, going into this week, we stated that prices in a buy program is bullish, right? Price created a bullish order block here, right? It traded up into a bearish fair value gap there, right? We repriced the entire fair value gap. We did not create an inversion fair value gap, right? I just got some caught my attention, and when I looked over, I saw Michelle Tucker had popped up in here. What's up, Empire Tradings? Saw Michelle Tucker pop up here. What's going on, Michelle? I ain't seen you in a month of Sundays. We did not create an inversion fair value gap yet on this weekly chart, on this weekly SIBI, right? What is required to create an inversion fair value gap? For those who don't know what an inversion fair value gap is, it's a fair value gap where price closes on the opposite side of what it's designed to do, right? Sub Venus, right? So this is a bearish fair value gap. So when you're trading up to a bearish fair value gap, it's designed to be resistance. That's what it's made for. That's what it's made for. Like Usher used to say, right? But if you on this is a weekly fair value gap. So on a weekly chart, if you get a candle that closes above the bearish fair value gap, then that creates an inversion fair value gap. Now, just because it closes above doesn't mean that it's going to be used as an inversion fair value gap. It has to go in accordance with the narrative of price, right? So since we are bullish on the higher time frame and we're anticipating price to draw into, excuse me, the buy side liquidity above, then we want to see this become an inversion fair value gap and then be used as support to trade up into the buy side liquidity, right? And we've talked in the past about why we're bullish on the higher time frame. Okay. Now, nothing moves in a straight line, right? Nothing moves in a straight line. So now we are here at an area where we anticipated to be in an area of accumulation. All this is, we talked about this in the past. We anticipate this as being an area of accumulation, right? So we're here on the weekly chart and we see, right, you want to outline how far can price go in either direction. That you always want to note that. So on our weekly chart here, we pointed out, we created a bullish, I don't know if I said bearish last time, but we created a bullish order block here. Right? If I said bearish last time, I apologize, but we created a bullish order block here, right? And as you see, once we created this bullish order block, when we traded above this opening price here, right? That's when this technically became a bullish order block, right? Once you offer that price, right? We're not going to get into how you form order blocks here, but if you don't understand that, go back and look at the, I got plenty of videos discussing what it is, and then Michael J. Huddleston got videos explaining how to create order blocks over there on his ICT page. That's not today's topic of discussion. I'm sorry. So we respect the bullish order block this week, right? And we trade all the way up and close at the higher end of the SIBI, repricing the entire SIBI, trading all the way through it, offering buy-side delivery all the way through it, because a SIBI is a 3-candle pattern where you only offer sell side delivery in between, in the area of candle 2. So candle 1 and candle 3 don't share price. So in the case of a SIBI, this is a sell side imbalance, buy side inefficiency, because it's inefficient buy side delivery. You have only sell side delivery, and it resides inside candle 2, right? So as price was dropping here, right, candle 1 and candle 2, it shares some buy side and sell side, right? They overlap. Candle 2 and candle 3, they share some buy side and sell side. They overlap. But candle 1 and candle 3 don't overlap at all, and it's only sell side delivery. So when you come back over here, we offer buy side delivery all the way to the top on this weekly candle from June, the week of June 2nd, 2025, right? So we offer buy side delivery for this SIBI, reprice it, and now, right, we, like I said, we respect the bullish order block here. Last week, right, we respect the bullish order block here. We're trading within the wick of this bullish order block, right? And if we look at the wick there on the bullish order block, don't need this, right? If we look at the wick, because that's the area where you want to see the most sensitivity, right? Look at the wick, right? We don't make it down to consequent encroachment of the wick on the week of June 9th, last week. This week, right, we trade down to consequent encroachment of the wick, right? So we're respecting respecting the wick of the bullish order block, right? Since we created it. Okay, so right now, this discount PD rate, meaning a PD rate below price, not a discount in the sense of premium and discount on this time frame, just in the sense of a PD rate below price. This discount PD rate is supporting price. Okay. Now, how far can price go down? Right? What's allowable? Right? So if we look at the order block itself, right, you have areas where you want to see price be sensitive on any PD rate, right? So for the order block, I already told you one area you want to see is in the wick. So on a bullish order block, from the tip of the wick to the open, right? A bearish order block, it'll be from the tip of the wick to the open. It'll just be on the bottom of the candle instead of the top, right? So for the bullish order block, from the tip of the wick to the open price, that's where you want to see a lot of sensitivity. You want to see price really not wanting to dig down into it. If price starts to dig down into the order block, mean threshold, 50% of the entire order block, is where you don't really want to see a candle closure, right? On this time frame, you don't want to see a candle closure below mean threshold of the order block, right? So if you anticipate in this order block to support price, you wouldn't really want to see a weekly closure or below the mean threshold of this bullish order block, right? Because that's starting to show weakness on the part of the bullish order block. Now, that's our best case scenario, right? We want this order block to support price and send us higher, right? Why do I say that's our best case scenario? Because we've traded up above the sell side um, um, imbalance, right? We've traded above the sell side imbalance, and we've offered buy side all the way through there, right? Now that we've done that, we want to see price go ahead and get out of here in a hurry. And this is our first discount PD array that we come to, right? We want to see price touch it and go, right? Exceedingly bullish, touch it and go. Now, that's our best case scenario, right? What else do we have down here? We have a weekly bullish fair value gap below price, right? So we got a weekly bullish fair value gap of below price, right? And I no longer have it drawn on the chart, but we were also watching this inversion fair value gap here, right? So as you see here, we traded up above this SIBI, created an inversion fair value gap because we closed above it on this time frame, traded down into it, right? And then move back up, creating the order block, right? So since we've utilized the inversion fair value gap and then created the order block, right? The BISI that we created during that move, right? We want to see that left as a breakaway gap because price has utilized a inversion fair value gap. Price has utilized this inversion fair value gap, and then it created, then it created a bullish fair value gap, right? So we want to see this order block support price and not come all the way back down to the breakaway gap, right? Why is that, Tim? Why do we not want to see that? Because if we look over here in price, because you'd always want to back up what you want to see with algorithmic reasons, right? If we look over here in price, we offered sell side delivery, right? We offered buy side delivery, right? We're looking at as we come below this area of consolidation right here, right? Right. You know, when we offer sell side and buy side delivery in an area of consolidation and then we leave it, it's easy to understand this is a balanced price range because we've offered sell side and buy side delivery and then we've left the area, right? So it's easy to see that as a balanced price range. So, right, there's a few ways you can get a balanced price range, right? So now from this area of consolidation, we trade down, offering sell side delivery, right? And then we trade back up, right? After we've taken out some sell side liquidity, right? And we trade back up and offer buy side delivery, right? And then right here, we leave that area, right? So now we've left that area, okay? And we have an order block sitting right at the high of that area. And right now, we're respecting that order block, right? Whenever we have a balanced price range, we want to see that balanced price range act as support in the case of you being bullish, right? Or resistance in the case of you being bearish, right? But we're bullish here, right? We're bullish, okay? Now, since the bullish fair value gap sits a little bit deeper down inside of the balanced price range, right? That's why we would like to see this remain a breakaway gap because yes, it's an inefficiency coming up on the buy side, right? But it's just offering buy side delivery to a sell side, right, imbalance, right? You got sell side, you got buy side there. And then if you look right here where the SIBI and the BISI overlap, right? This is also another way to get a balanced price range. When you got opposed where SIBIs, the area between a SIBI and a BISI where they overlap, that's also a balanced price range, right? Why? Because you offered sell side delivery, you offered buy side delivery in this area right here, and we left that area, right? In that area right there, and then we left that area. So that's a balanced price range. Once you offer sell side and buy side delivery, then leave the area. That area is a balanced price range. You offer sell side and buy side delivery and leave the area. That's a balanced price range. You offer sell side and buy side delivery and leave the area. That's a balanced price range. Okay. Okay. So that's why we want to see this bullish order block support price and send us higher, right? Because the algorithm has left this area and given us an indication that it's done with it. It's a balanced price range. Now, can price wick down and trade lower? Yes, it can. But these are algorithmic signatures that you're watching to support your narrative, and it gives you ideas of where price can go, right? Yes. Does the weekly have a potential reason to come down here? Yes, it does. And then if it starts to go down there, that's when you want to look at a higher time frame and say, do we have a reason to go down there? And when you get to your higher time frame, you can see, yes, we do have a potential reason to go down there on the higher time frame. While I get me a sip of water, someone please tell me what is our potential reason on the monthly chart that could possibly bring us down here, where that we know that this is the mean threshold of the bullish order block here. And then we know that the weekly so the low of that right there, that's the high of the weekly BISI. That's our weekly BISI right there, right? So now what on the monthly time frame would be a algorithmic reason for the monthly chart to want to come back down there, right?
Yeah, the monthly inversion gap, and it's a balanced price range in that area. Well, that other monthly candle hasn't finished forming, but it is an inversion.
Very good. We have a monthly inversion fair value gap right here. All right. So we got a monthly SIBI that has become an inversion fair value gap, right? So on the monthly time frame, right? On the monthly time frame, the monthly chart has a reason for the algorithm to reprice down, right? What's the reason, Tim? Whenever you create a PD array, right? Whenever you create a PD array, you always want to see price. Well, if you're afforded an opportunity for a retracement back to that PD array on that time frame, right? That's expected and allowable. So on a monthly time frame, right? We have come up, created an inversion fair value gap, but on this monthly time frame, we haven't traded back to that inversion fair value gap to use it as support. Oh, you see, like we created it here on this May candle, and this June candle did not trade back down into it. So we still can anticipate a possibility of price in June or July or August or when whatever time in the future we can anticipate price wanting to retrace back to this inversion fair value gap, right? If it never does, it never does. But the monthly has a reason to come back down there. So if the monthly has a reason to come back down there, right? And then we go to the weekly and we see that that monthly inversion fair value gap is down here right in line with where the weekly inversion fair value gap was, and right in line where this weekly bullish fair value gap is. If the weekly starts to come back down to this bullish fair value gap, we're not panicking because we understand that the higher time frame has a reason to come down there, right? It has a reason to come down there. So if we start to trade down on the weekly and just say we get a weekly closure below mean threshold of this bullish order block, we're not panicking, right? Why? Because we want to see the bullish order block support price, but the higher time frame has a reason to come down there, so that can cause this time frame, which is lower than the monthly, to do something against what we want for best case scenario, because the higher time frame rules, right? So if we get a weekly closure below mean threshold, right, we understand that that's allowable because the monthly has a reason to come down here, right? Now, if we come down here and get a monthly closure below this inversion fair value gap, right, is that something that's allowable for the bullish narrative? Mhm. That's a question. I'm looking at the chat and I'm listening. Is that allowable for the bullish narrative? Or is that like, whoa, wait a minute, I'm on the wrong side? Hmm? Empire Trade says, yes, that's allowable for us to come get a monthly closure below this inversion fair value gap. Does anybody agree with that? Michelle Tucker said no. Who agree with Michelle and who agree with Empire Traders? If you agree with Empire Traders, I ain't saying anything possible. I said, is it allowable for the bullish thesis? We already know anything is possible. We're talking about the bullish thesis. We're going off of algorithmic principles, right? Is that we're going off of algorithmic principles. Talk about anything possible. Say it with your chest. Don't get out here, start backpedaling. Oh man, anything possible, man. Anything possible. Say it with your chest. How about that? So, and if you agree with Empire Traders, put a 1 in the chat. Yes, a monthly closure below this would be allowable. If you agree with Michelle Tucker, put a 2 in the chat. No, a monthly closure below this won't be allowable for the bullish thesis. Empire Traders agree 1, and Michelle Tucker agree 2. Put it in the chat. Don't y'all hurt my feelings. 1, because it won't give us a bearish breaking market structure. 2, oh, I got a 1 and I got a 2, and I got a whole lot more people watching than 2 people. I'm going to whistle the theme of Jeopardy. And everybody knows what happens if I get to the end of the thing and my chat is still blank. Somebody say, repeat the question, please. Okay, the question was, does a monthly closure below this inversion fair value gap, is that allowable and supports the bullish thesis? Because we said this monthly inversion fair value gap was a reason for the weekly to trade down below the bullish order block, right? We said we want to see the bullish order block support price and send us to the buy side, because this is our first line of defense, if you will, on top of the balanced price range, right? So on a weekly time frame, we would not want to see a closure below mean threshold of this. But since the monthly has a reason it can come down here, we have to allow for the weekly, even if we get a weekly closure below mean threshold of this bullish order block, we have to allow for that to happen, because the higher time frame has a reason to come lower than what our first line of defense is on this weekly time frame. And then I asked the question on the monthly, if price started to trade down into the monthly inversion fair value gap, we understand. And I said, if we get a monthly closure below this monthly fair value gap, is that allowable for the bullish narrative? Empire Trader said, yes, it's allowable. And Michelle Tucker said, no, it's not allowable. If you agree with Empire Traders that, yes, a monthly closure below this is allowable for the bullish thesis, put a 1 in the chat. If a monthly closure below this inversion fair value gap is not allowable for the bullish thesis, put a 2 in the chat. Now, let me open my eyes and see if we got any participation. Oh, I see some people. Now let me make sure. Let me make sure nobody ain't trying to repeat here to make it look like we got participation. Ah, okay. We got I answered before you said 1 or 2. All right, we got a 2, a 2, a 2, a 2, a 2, a 2, and a 1. All right. So, the 2s would be correct. Why would the 2s be correct? Right? Because when we look on the monthly chart here, right, you always want to back it up with algorithmic reasoning. Okay. When we look on the monthly chart here, right, the monthly chart, we came down, right, and we took out sell side liquidity, right? We're coming down to an anticipatory reactionary point, a place of anticipated support, right? An anticipatory reactionary point, right? We got a shift in sentiment. We went the other way. We were trading lower and we went higher. We traded above the opening price of these down closed candles right there, right? That creates a bullish order block, right? That's the making of a bullish order block. All we got to do is offer the price, right? What strengthens the fact or confirms, if you will, that it's going to be used as a bullish order block? One, it's got to be in a buy program, right? And is if we create a fair value gap after making that bullish order block, that confirms it, that stamps it, that lets you know, okay, yes, this is a bullish order block. But in the anticipation of it being used as a bullish order block, all we need is to offer that price, right, in a buy program and in the narrative of trading toward the buy side liquidity. So if this is a super long wick and it's a tiny wick on the bottom, so we're just going to go body to body on this here. If you went wick to wick, right, your mean threshold would be at the high of it. But since we got such a long wick there, that's a irregular wick. It's much larger than the entire candle itself, right? So we look at mean threshold of the order block, right? Mean threshold of the order block is right there at consequent encroachment of the inversion fair value gap, right? If on a monthly basis, we don't want to see a closure below consequent encroachment of that inversion fair value gap. A closure below consequent encroachment of that inversion fair value gap implies what? The same thing that it applied with closing below the mean threshold of the weekly bullish order block. It implies weakness on the part of the weekly bullish order block, right? So if we said if we was getting a closure below there, it does the monthly have a reason to come down there, right? So yes, the monthly has a reason to go down there. So now looking at the monthly, right? The monthly, unless you're going to go up to a yearly or go up to a quarterly, but the monthly is pretty much the top. The monthly is a top, right? So if the monthly, we don't have any imbalances down here, right? We don't have any imbalances that we need to come to in this price leg right there, right? The only thing we have, true, we have a long wick, right? Wicks are gaps too, but, right, we have a order block right there, no buy side imbalances to come to. So therefore, a closure below consequent encroachment of this inversion fair value gap on a monthly basis shows weakness. That's bearish. A closure below the inversion fair value gap not only shows weakness with the inversion fair value gap, but also the bullish order block. This bullish order block's job is to support price. It should block price from going lower, right? This inversion fair value gap should support price to send it higher because we're in a buy program and this is a discount PD array where the algorithm traded above a bearish PD array in the premium of this entire move, right? So this entire move, we had a bearish PD array in the premium, right? Where does smart money sell? They sell in the premium. There was a PD array that's designed for selling when you get to it. But because we're in a buy program, the algorithm traded, slapped through it, and created an inversion fair value gap. So since it traded through this and created an inversion fair value gap, right? That's an algorithmic signature saying, I don't want to come back down here. If it wanted to come back down here, it would have came back down off of the premium bearish fair value gap. So if we do come back down there, right, that means that the algorithm was just trading back up to take liquidity above the bodies in the rejection block, and now it's going back down to get some liquidity, right? And the only liquidity here is below that low, right? So a closure below that would not be allowable for the bullish thesis, because we've already established what is allowable based off of what price has done. And it's everything that I just said. If you can't remember, just back it up and look at it or rewatch it later. Okay, so the twos would be correct. All right. And this teachable moment is being brought to you by the Smart Money Manuscript. It will be available for the gang. Everybody that's paying through WAP that's in the Discord, right? If you're paying through the Discord for WAP and you've been paying through WAP to be in the Discord prior to May 27, 2025, it will be available for free. Everybody else, it will be $69.99. Those that's in the gang paying through WAP, if you want to support it, I'm not blocking my blessing. Go ahead. The link will be available for both ways, the free way and the $69.99 way. Do whatever, whatever you're led to do. All right. Now, let's go down to the daily time frame, right? We looked at the weekly, right? We looked at the monthly. Now here we are on a daily time frame. Okay. Here we are on a daily time frame. On the daily time frame, we traded up into a bearish fair value gap, right? And we created an inversion fair value gap, right? Now, looking at, right, what we did here, we traded up here on this day on the 10th, created an inversion fair value gap, right? And traded into the lower quadrant of the upper fair value gap. On the 11th, we traded up a little higher above the lower quadrant and failed to reach consequent encroachment, right? For those who don't know what I'm talking about when I say lower quadrant, if you put any PD array in the 4th grade, right, there are your quadrants, right? Lower quadrant, consequent encroachment, upper quadrant, high. So you got the low, lower quadrant, consequent encroachment, upper quadrant, high, right? And if it's a block, it'll be your low, lower quadrant, mean threshold, upper quadrant, and the high. If it's event horizon, in between two PD arrays, you have the low, the lower quadrant, event horizon, the upper quadrant, and the high. All right. So yeah, all the different names for 50%. The 50% is the middle. Event horizon, mean threshold, equilibrium, consequent encroachment. You know what I'm saying? The middle. Okay. 50%. Okay. Then we came back down over here on the 13th and closed back below this inversion fair value gap, right? So you say, hey, Tim, you say when we close below the PD array, once we make it, that's showing weakness, right? Like we said, you go back to the higher time frame. Is it a reason for this to come back down here, right? And we go to our weekly time frame there, right? During that week, when we traded up into that area, and then we came back down right there, right? On the weekly time frame, right? What we're doing here, we traded up, right? We had repriced the weekly SIBI, right? We traded up into a weekly bearish order block, right? We hit a weekly bearish order block, Then we came back down, right here, traded into the wick of the weekly bullish order block. Then we traded back up and closed here on that Friday the 13th. We closed there above consequent encroachment of the weekly, right? So on a daily time frame, right? Remember, we came here and we closed right there. So that closure on the weekly is respecting consequent encroachment of the weekly time frame, but on the daily, we are disrespecting a daily PD rate. And Roby said, if the higher time frame has a reason to come down there, right, then disrespecting the lower time frame PD arrays is allowable. All right. So then we come back on the 16th, the month. This is this week's price action, right? So we come back and we trade back up, right, above the SIBI, right? And we trade up into the rejection block that had just been formed when we traded up into the upper fair value gap, trade into the rejection block, close. And then throughout the rest of the week, right, we make our way back down, right? And we trade below these relative equal lows here, right? Make our way back down, trade below these relative equal lows, and then we come back up and close right here below this daily SIBI again, right? This daily SIBI again. So we're closing below the daily SIBI, right? Showing weakness, right? And then we go back to our weekly, and we see on our weekly that we closed above consequent encroachment of the weekly. So we're still respecting the weekly SIBI, right, that we want to see become an inversion and be used as support. We're still respecting the SIBI, right, on the weekly time frame. Okay. So we are still on the weekly time frame. We have not violated anything that we have not violated the buy program on the weekly time frame, right? We have not violated the buy program on the weekly time frame. We are still, this bullish order block and this bearish fair value gap is still being used as support, right? We haven't moved into the realm of trading lower down to the monthly reason for trading lower. Okay. Now, this week, and that's where we are in price right now, right? That's where price is right now as far as the higher time frame. All of the PD arrays we're looking to support price to send us higher into the buy side liquidity up there. And also on the daily time frame here, I just noticed it as I peeked over here, this inversion fair value gap down here, right? We did not, we came close, but we did not trade back down into it, right? We did trade back down into this one, right? We did trade back down into that one and closed above it, right? Right. These are all old sell side imbalances that we was watching as we were coming up. As price was coming up, we was watching all of this stuff over here on this side, right? So on the daily time frame, we are still right in this area of accumulation there, right? As far as our market maker buy model, we said that was our possible smart money reversal. Once we got this here, once we came there and traded back above that high, we said, okay, that is our smart money reversal, because this right here was our low risk buy, right? Then once we got our low risk buy, we said, okay, we are officially on the right side of a market maker buy model, right? And then this was our low risk buy. And then we moved into our first area of accumulation over here, right? We moved into our first area of accumulation. And in this area of accumulation, right, it was sort of like you can say it was like kind of, this could have been the area of accumulation because we got this right here, but in the sense of not wanting to really dig, just looking at this entire thing as an area of accumulation. Okay. But as you see, we came up, retraced back, right? And then expanded up, retraced back, then expanded up like that right there. So just looking at this whole thing as an area of accumulation, right? So you accumulate it, we expand, we retrace, we expand, right? So this is the area of accumulation, this is the area of accumulation, and then we moved into it also. But it's just like we did here, just looking at this as one big area of accumulation. I'm just looking at this right here as one big area of accumulation because it's a very slow trickle up, right? It's a very slow trickle up as we're moving up. All right. So we're on the right side of market maker buy model, smart money reversal, low risk buy, first stage accumulation, second stage reaccumulation. That's where we are here, right? And like I said, you can go in and really fine tooth nitpick it and say, okay, first stage accumulation, second stage reaccumulation, and now you're at a third stage of reaccumulation over here. If you really, or you can say second stage, third stage, fourth stage, if you want to really, but I ain't doing all that. I'm just looking because we're just basically consolidating here, right? We consolidated in a discount of the range. Now we're consolidating in the premium of the range, right? So that's why I'm just looking at it as one area. Same thing here, consolidated in the discount of the range, consolidated in the premium of the range. And then there we go, right? What range are you talking about, Tim? That's the lowest low. That's the highest high of this entire little area there. If you look halfway through, that's the discount of the range. That's the premium of the range right there, right? All right. So that's where we are right now in price as far as the higher time frame is concerned, right? Now we know what's allowable for the monthly, right? So the monthly, if we start to trade down toward this right here, we know that's allowable because the monthly has a reason to come down here, right? Looking at what the daily is doing here, right? We know that this is mean threshold of the weekly order block, right? We know that's mean threshold of the weekly order block. So if the daily starts to trade down to what do we have here on the daily? We don't have any, right? We don't have any buy side imbalances that we need to reprice to down here. We don't have any buy side imbalances that we need to reprice to, right? We haven't created any sell side imbalances yet, right? So we're not giving any strong indication yet that it wants to come back down in this direction because we're not creating any sell side imbalances. Every time we come down, right? We come down, we immediately overlap the candle, come down, immediately overlap the candle, come down, overlap the candle, come down, right? So now will we immediately overlap the candle or will we start to form a sell side imbalance, right? If we start to form a sell side imbalance showing that it wants to go in this direction, the weekly has a reason to come down here. The monthly has a reason to come down here. So it's allowable for price to start to come in this direction. Now, if it's allowable for price to come in this direction, right, there's no buy side imbalance to reprice to. So what can we anticipate as a target, right? We have sell side liquidity resting right here, right? We got sell side liquidity resting right there, right? So you have sell side liquidity there, right? And when you look at what price has done, right? What do we say when you offer sell side and buy side, right? You offer sell side delivery and buy side delivery and then leave that area, right? So now we're coming from here, consequent encroachment of this monthly thing. We actually can come here from this high there, right? We come here from this high there. Everything below here, right? We're looking at this as a balanced price range, right? Let's do like this right here. So the chart won't look so junky. Can y'all hear my son in there yelling? You know, on the computer playing the game. All right. So now, balanced price range. So since this is a balanced price range, we're not going to come down here and anchor our fib here and run it up to this highest high there. Let me move this other stuff out of the way. All right. We're not going to do that. Wow, this balanced price range, we don't want to see price coming back down there. We're not going to come to this low here and run our fib there. Why? It's a balanced price range. We don't want to see price come down there. Now, what we can anchor it at is this low right here. We can anchor it at this low right there. Why? Because this right here is the lowest low as we were leaving the balanced price range, right? But for me, right, since price, you know, is exceedingly bullish, right, you wouldn't be wrong for anchoring there, right? But for me, right, I'm anchoring right there as we leave this area, right? So as we leave this area right there, that low right there, at that little liquidity void there, that's where I'll anchor it there. Like I say, you're not wrong for anchoring it here, but that's where I anchor mine there, right? So anchoring it there, running the high there, right? So now this is our bullish dealing range right there that we're working inside, right? This is the lowest daily low. This is the highest daily high right there, right? And this is our dealing range there. This is equilibrium of this range right there. Okay. So now on the daily time frame, right? If we start to trade back down into what the monthly chart is allowing, right? Matter of fact, I'm just gonna anchor it here and right there. So it'll be on an actual swing low, right? It'll be on A, but remember, this is like where I like to look at it. Why? Because I don't like to dig too deep into the balanced price range, right? But one reason why you, when I say you're not wrong for anchoring there, because if we look over here at this bullish breaker that we got right here, excuse me, it has some amount, there is a inversion fair value gap right there inside that bullish breaker, right? So whenever you got an inversion fair value gap inside the leg of a breaker, right? If price trades to that inversion fair value gap, that is affording you a better entry opportunity than just trading right off the high of the breaker, right? So always remember that. But right, and for me, I'm looking at it from there, right? But there, right there, that's your entire move, right? This low right here traded below sell side, created a new liquidity pool, and then we came up here, right, and created a new liquidity pool above some highs, right? So that's your bullish dealing range that price is in right now, right? That's your bullish dealing range that price is in right now. This is your sell side liquidity pool that was created trading below those lows right there. And this right here is your buy side liquidity pool that was created trading above these highs. As we come up, we kept extending the range. Now, remember, this right here is the reason for the weekly to come down here. That's mean threshold of the weekly order block. Let's do this right here. Let's come here and identify this. Bullish order block. Bullish order block. Open high. I don't have a mean threshold, so I'll just come here and just rename this bullish order block mean threshold. And that's on the week. Then I can move this out the way. No, that's not a good idea. Okay. So, right. This is our bullish order block mean threshold on the weekly. Right. We have internal sell side liquidity on the daily right here. Right. And this right here is our quadrants. I'm gonna go in here, darken these up so we can see it better. Because I got a lot going on the chart here. Those are the quadrants. These colors ain't working for me, so I'm trying to make it so that everything looks like it's easily identified. If y'all hear my son going crazy back there on that game, I apologize. Right. So, right, like we said, this is our dealing range here, our current dealing range that we're in. Right. Our current dealing range that we're in. This is a bullish dealing range that we're in. We're in a buy program. We got a bullish dealing range, right? And this is our daily time frame, right? We got a reason for the weekly to come down. We got mean threshold of the weekly order block. We got a reason for the monthly to come down, right? We got a inversion fair value gap on the monthly, right? We are engineering liquidity here, right? We've come up and we're just sitting here engineering liquidity, okay? Right? Showing a little bit of weakness on, well, we're showing weakness on this lower SIBI, right? We just traded up into the upper SIBI. And so this premium PD array, right? Premium bearish PD array, its job is to resist price, push price down. We have traded into it, respect consequent encroachment, respect the lower quarter, and even respect it as a whole. We never got a closure inside of it, right? So it's doing its job right there, right? We went up, we touched it, backed off, touched it, backed off, touched it, backed off. That day we didn't. This day touched it, backed off. Didn't even touch it, came down, and came down some more, right? So it's doing its job right now. Okay. On the daily time frame, we don't have any buy side inefficiencies to trade back down to, right? The only thing we have on the daily time frame is liquidity, right? We have two levels of sell side liquidity inside our bullish dealing range on the daily time frame, right? This sell side liquidity rests near mean threshold of a weekly order block that we said it's allowable for price to come back down there. This sell side liquidity rests at the high of a monthly inversion fair value gap that we said it's allowable to come back down there, right? So in this price leg here, or this in this last expansion dealing range, this price leg there, because we come down, we did trade below a low there. So yes, this last expansion dealing range of our overall range, right? We have internal liquidity we can come to. We have internal liquidity we can come to, right? And it's still allowable for the bullish narrative, and we can come and sweep sell side liquidity here before going back up. We can sweep sell side liquidity here before going back up, right? What does the algorithm use for rocket fuel? Liquidity, right? So here we are at the upper quadrant of our dealing range, right? We've come back down, right? And we've taken a little liquidity there, right? So now what do you want to see if that liquidity pushes us up, or if we start to create sell side imbalances to come down into a discount of the range, right? Right? You will want to come down to a discount of the range to participate in this move, right? If you want to come to a discount of the range, this is equilibrium, right? Anything below equilibrium is a discount, right? This is our dealing range here. If we want to come down to a discount of our dealing range, right? Taking out that sell side liquidity is allowable on the daily time frame, because that gives us an opportunity to participate in the discount of this expansion, right? We expand, retrace, then deliver. Okay, that's allowable to come down there. So you always want to know what's allowable, where am I in my dealing range, so that you don't panic and you're not guessing as to what price is trying to do. All right. I think that's all I got. I think that's all I got. Y'all know I just do this I do this off the top of my dome, and I'm starting to sweat. So that's all I got. Do anybody got any questions for me before I wrap it up?
No, thank you so much.
Who is that? Jada? That sound like Jada. Who that? Jada.
Yes,
What's up, Jada?
nothing much.
Yes. Good stuff. Thank you. You're welcome. All right, man. That's it. That's all I got. I don't hear nobody saying nothing. I don't see no questions in the chat. You're welcome. Monday. 23rd. Monday the 23rd. So tape reading. Yeah. All right. So Monday the 23rd, we got tape reading with the diamond members and the mentees, then the YouTube mentee members. right? Those that's in the that's still part of the gang through YouTube, not paying through WAP, just going through YouTube. Mentees, we have tape reading on Mondays. The Diamond members in the Discord, we have tape reading Monday, Wednesday, and Friday. So Monday, we're having tape reading with the Diamond members and the mentees. If I get bored over the weekend, well, we might do a weekend chart prep, but y'all don't need me no more. I was bored over. I took some time off going into the Juneteenth holiday. I said, hey, I'll see y'all Friday. And because I had to go to Atlanta, I had stuff I had to do. Plus, I was just taking some time off. And so I'm reaching out in the Discord. Matter of fact, let me show y'all this call. Sometimes y'all think I be capping. Y'all think I be capping. So I come over here in the Discord. Where are we? Let me see here. This is class participation. No, it's not in there. Where did I go? I stay popped up. Was it here? No, in main chat. That's where it is, right? So yesterday at 11:54, right? No, back up. So on the 18th, right? The 18th was Wednesday. So Wednesday night, it was late night. Wednesday night, it was late night. I get it. It's late right here. No. Back up some more. Wednesday afternoon, right? Wednesday afternoon at 3 p.m. Right? I said, even before that, Wednesday morning, right? At 10:13, right? Some little cyber stalker was like, hey, Tim, I see you typing. What? Right? I said, good morning. I'm driving back from Atlanta. This is when I went to Atlanta, right? I have a little time. If you have any questions or something you need clarification on, react to this post with a raised hand, and we'll jump in the I Stay Popped Up channel and discuss it. One person raised their hand, right? A cyber stalker, and we jumped in there and we discussed it, right? Then I came back that afternoon and I said, everybody that was in the pop-up earlier, pull up real quick and I stay popped up. Only one person came. That was Calio, right? One person came. That was Calio. People come back, how I missed this, right? Then later that night, I was bored, right? I said, I'm bored and can't go to sleep. So you know what that means. If you got any questions or something, raise your hand. Nobody pulled up. I see that Jada came back like almost an hour later and was like, hi, Tim. Yeah, I wasn't in here no more. Right? Then yesterday, right? I said I got about an hour of free time before my family called. Y'all pull up. Nobody pulled up. Right? Then yesterday evening, I said, I know y'all tired of hearing it, but y'all pull up. A few people pulled up for this right here. A few people pulled up for this. All right. But over the time that I was off, right? 1, 2, 3, 4, 5 different times I popped up, and majority of the times ain't nobody show up, right? Majority of the times ain't nobody show up. So that tells me y'all don't need me no more. That tells me y'all don't need me no more. That tells me y'all ready to spread y'all wings and fly away. Ready to spread y'all wings and fly away. And I ain't mad at it. I love it. I love the fact that y'all don't need me no more. I love that y'all ready to spread y'all wings and fly away. Right? So, what I say? Some of us still have a W-2 and can't always pull up in the middle of the workday. I get that. I ain't mad at you. I saw 2 of the 5 and I showed up for those. Yeah, I ain't mad at you. That's why they call them pop-ups. You know what I'm saying? That's why they call them pop-ups. It's just, whenever I got, I'm bored or I got, random time. That's why it's called the pop-up. Right? We have a set schedule, and then we have pop-ups. Right? I can't make the notification system. somebody said we need a better notification system. Hey, turn your notifications on. That ain't on me. That ain't on me. Turn your notifications on. That's why we got set times. We got a schedule for certain things we do, right? And then the pop-ups. Hey, the pop-ups just random. Now this here. I'm glad y'all saying this. Let's discuss it. Right? Let's discuss it. Matter of fact, y'all pull up in the y'all pull up in the Zoom so you can unmute and talk, right? Because I want to touch on this. Some of us got W-2s and can't pop up in the middle. I want to touch on that. I see Kashaya pointing to it. Yeah, that part. I see she got that part there. Valentine say, hey, we got W-2s, we can't pop up. I want to touch on it. Touch somebody, yeah, come on, pull up inside the, y'all click on the link that's look at the top of the chat, click on the link and pull up inside the Zoom and unmute and let's talk about it. Because I want to talk about it. I want to touch on it. I want to touch on it. I want to talk about it. Who in here? Let me go in here. Let me open up my Discord and look at something. Right? Let me go on my Discord and look at something. Okay. Let me see. Members. All right. Now, let me see here. Roles. There you go. There you go, right there. So, let me see. These are the, let me go here to this one here. Oh. All right. So we got, come on, Karen. Is this private info? Can I, come on, click on the link. I said, come on, click on the link. It ain't private. We out here on Algo's internet. Let me see here. Who was that? Valentine. Let me see. Valentine. No, Valentine wasn't over there. Kashaya. Let me see here. Let me see here. Kashaya. No, Kashaya wasn't over. Wait a minute. Let me see if Kashaya is even in there. Members. Let me undo this right here. Let's see here. Valentine. Okay, Valentine not in there. I don't see Valentine. Oh, wait a minute. Valentine. What's your Discord name, Valentine? What's your Discord name? Okay, say is it?
Shawnee.
Shawnee, that's what it is. Shawnee. Okay, so Shawnee. Now let me look in here. All right, Shawnee. All right, so Shawnee. Oh, yeah. Shawnee. I'm glad Shawnee was the one who said that. Shawnee, baby. Okay. So I just want to address this. This just what I want to address, right? And it ain't no shot at Shawnee or nobody else. It ain't no shot at Shawnee or nobody else. But who remember when I did the boot camp? Who remember when I did the boot camp? Right? When I did the boot camp, I did the boot camp and like the morning live sessions. It was deep. It was deep in the boot camp. The evening sessions, it was deep, and we had the boot camp. The sessions was late in the evening. It was deep. I'm talking about it was deep, right? And everybody, pretty much everybody that was in the boot camp, got a 9 to 5, right? Because matter of fact, that's why I did the Asian assassins. Understand, because people like, hey, I really want to do the boot camp, but I couldn't commit to it for real because of my job. So I did the Asian assassins. But even still, the boot camp was deep every single day. It was deep every single day. People was up in there because I was telling my brother, I'm like, man, we deep every day. We deep every day. But when we be doing like the tape reading for the diamond session, it don't always be that deep, right? When we do the, you know what I'm saying? But and the difference is, right? The only difference is, for the information the same. The only difference is the boot camp and the Asian assassin. It was a price tag on it. So since that price tag was put on it, right? As people, me included, when I pay for something, I make the time to participate, even if it's inconvenient for me, because I done spent my hard-earned money, right? And now, when it comes to being in Discord, you're spending your hard-earned money, but it's easier for us to justify $30 as opposed to $1,000, right? Okay, this right here is just $30. We gon' tape read 3 times a week. I ain't got to be there every time. Okay, I missed this pop-up. Tim do pop-ups all the time. He'll do another pop-up. I'm at work. I ain't got time to really tap in. But if we spend $1,000, man, I paid $1,000 for this. I gotta tap in to see what's going on. That's just us. That's us as people. And it's no knock against anybody. That's us as people, right? And I applaud you all for the sacrifice that you do make in trying to better yourself in this, the time that you do take. That's why I constantly try to be available for you all, because I understand people's schedule are different, people times are different, and I constantly try to be available for y'all because I really truly want to see you all succeed in this, right? And I try to do it in a way that's as affordable as possible for everybody. So I joke a lot, I play a lot, I try to make it fun, you know what I'm saying? But one thing I do, I'm spending my time to be here with you. If I don't get my class participation when I'm asking for it, y'all know I'm out of here. I get my feelings get hurt quick. I'm a petty old man. My feelings get hurt quick and I'm out of here. But I'm saying all that to say, let's not get into a place where we look for excuses of not giving 110%. It hurt to give 110%. It does. To be the best of the best, man, you got to show up 2 hours early to practice. To be the best of the best, you got to shoot those extra 300 free throws. To be the best of the best, you got to study that coding book a little bit longer than the next person. To be the best, you got to have that dog in you to be the best of the best, right? And when you're learning something new, especially as adults, it's extremely hard because we got so many things that we can put before what we trying to do. We got families, we got jobs, we tired, we've been working all day. We it's so many. I got to take my kids to soccer practice. I got to go pick my grandbaby up because my son got to work. I got to go pick up my grandbaby because my daughter got to work. I got to go pick up my daughter. I got my husband got a fever and he acting like a baby. My wife got to work overtime, so now I got to pick the kids up. We got a million things as adults that we can put in front of the things that we want to do for ourselves. And as parents, as responsible parents, responsible spouses, we put our children and spouses' needs in front of our own. All right, in front of our own. But I just want you to know I'm proud of you for taking every step that you take to be involved in the gang. But I don't want us to get into the habit of making excuses for, you know what I'm saying, like when I know that we can do it. And you know that you can do it because when you, just like me, when I put a price tag on something, just like when I was over here, like I be telling people, I got the pictures and plaques to prove it. When I spent $4,000 for a trading course, I was working. I was still working when I paid $4,000 for a trading course. I was there every time they was doing something, right? I paid $1,000, I think, for Jada Trader's course. I used to have my laptop in my cubicle on my job because I'm gonna be there. I paid money for this, man. Big money for this. All right. But the stuff that I can get for free, like ICT concepts, man, you should have seen how lax I was when I was studying the ICT concepts. And that turned out to be the best thing that I've ever came across. And I was totally lax on it. Why? Because I didn't pay for it. I'm tired. I don't feel like watching no videos tonight. I'm tired. I don't feel like listening to this. Man, I got to go pick the kids up from school. My son wasn't driving back then. I got to go pick the kids up from school. You know what I'm saying? Yeah, I got to do a date night. I got to do it. Me and my wife ain't went out all week. I got to do a date night. I'm not studying tonight. I'm tired. And this was the best thing that I ever found when it come to trading. And I was totally lax on it. Totally lax on it. Why? Because I didn't pay for it at all. The stuff that I paid for, I was there, 10 toes down, early. Right? We all do it, man. We all do it. But like I say, this ain't no beat nobody up session. This is just to say I appreciate y'all. I'm proud of y'all. And let's remember to keep giving that 110%, because as grown people with jobs and kids, hey man, it get hard. It get hard trying to do something, trying to learn something new as an adult, trying to move outside your comfort zone, right? Trying to better yourself. Right? Everything that when it comes to bettering yourself, it involves some kind of pain, right? You want to get in shape, exercising, some kind of pain there, right? You want to whatever, you got to sacrifice something, right? You want to go to school to learn more, you got to sacrifice some time. It's going to be some pain there. You're going to have to give something up, right? You're going to have to, I want to go back to college or university or whatever y'all call it where you live, right? You got to give up some time and some pain there. You're losing time with your kids. You're losing time with your spouse. There's some pain there, right? I want to lose weight, right? So I got to exercise and eat different, right? You got to give up that stuff that you once loved. There's some pain giving up that food you used to like to eat, right? It might even be some hunger pains because you're eating smaller portions, right? It's everything that's going to better you. It's going to be some kind of pain involved, right? Like Kashai say, we got to lock in, man. We got to lock in. And not saying you ain't been locked in. Don't never like downplay your efforts, right? Don't never downplay your efforts, but just know you can always do more, right? Don't whatever you're doing now, don't never downplay that and say, "Ah, man, I've been going hard. I'm proud of myself, but I know I can do more." Right? Just think about it when you go to a gym and you're exercising, right? If you're exercising by yourself, right? If you're exercising by yourself, when you get to that 8th burpee and you know you're supposed to be doing 10 and you so tired, you will stop and get some water. But if you're there with a trainer and they say 2 more, you be just as tired. You'll do another one. 1 more. You'll do another one because you got that trainer there pushing you. So you know that you can do more. But if you're left alone and up to your own decision making, you'll stop. I do it all the time. When I go to the gym, I do it all the time. If I'm at the gym working out by myself, I don't work out as hard as if I'm working out with somebody. If I'm working out with my son and he'd be like, "What? Give me 2 more." I get them 2 more. But if I'm working out by myself, got to pull them cables like this right here, and I say in my head I'm gonna do 10, and then I get to 9, I'm like, that's enough. But if somebody else standing with me, they be like, "Oh, give me that 1 more." I'm gonna get it, because other people will push us harder than we'll push ourselves, unless you build to that level where you got that dog in you. All right. So I challenge you to do this. I challenge you to do this. Don't let me push you harder than you push you. Right? That's it. Just don't let me push you harder than I push you. Right? Push yourself to the limits in this thing that we trying to learn how to do this trading stuff. Push it to the limit. Don't let me push you harder than you push yourself. Right? I think I'm done. I think I'm done running my mouth, man. I think I'm finished. I appreciate y'all for just sitting around listening to me run my mouth, man. I know we ain't talking about price no more, but I just, as the old church folk used to say, the Lord just laid something in my spirit. The Lord just laid something in my spirit. The Lord put something on my heart, and I dropped by to tell you. Hey man, that's all I got. I appreciate y'all for hanging out with me. If you're in the gang and you're not a diamond member, right? If you're in the gang and you're not a diamond member, put a 1 in the chat. Right? Why am I putting a 1 in the chat? Because I'm going to invite you to the tape reading session Monday morning. All right. So let me come here and set up my Zoom call for Monday morning. All right. Tape reading session. Monday is the 23rd, 9 a.m. All right. So that's going to be June 23rd. June 23rd at 9 a.m. All right. So got it set up. All right. Let me copy that link. Link It's copied. Okay, Kim. All right, I see Kim. Kim, what's your Discord name? Kim, is your Discord name Kim? Yes. Okay, Kim. Discord name Kim. Kim, boom. I just sent you the link in Discord, Kim. Shiny. All right, Shiny. Where you at, Shiny? Shiny. There you go, Shiny. Boom. I just sent you the link, Shiny. Speak, Lord. Speak to me. Speak, Lord. Michelle Tucker said, I'll be in the office. All right. I'm gonna send you the link anyway, Michelle, just in case you get an opportunity to poke your head in there. Michelle, where you at? Cheese and rice. Where's Michelle at? Where in the world is Michelle? Michelle, there she go right there. All right. There you go, Michelle. I sent you the link anyway, just in case you poke your head in there. All right. Okay, that's all I see. That's all I see. Those are the ones I see. All right, those are the ones I see. Everybody that has sent me a one and you're not a diamond member, I've sent you the link to invite you to the tape reading session because y'all sat through all of this gum flapping. I appreciate y'all. Again, I'm proud of y'all, and I challenge you to not let me push you more than you push yourself. And we're gonna get there. Again, if I decide to do a pop-up this weekend and do a weekend chart prep, then I'll let y'all know when I do it. Also, if I do a pop-up with the weekend chart prep, nah, I ain't gonna promise that. I was gonna say I'll record it, but I ain't gonna promise that. I'll let y'all know. Y'all enjoy your weekend. Take some time to spend time with family. Take some time to study price and take some time to relax. Right. And I'll see y'all back here next week. And we're going to do the same thing over and over again. We're going to read these candles. We're going to enter these trades. We're going to earn money. We're going to manage our risk. And we're going to build a new Wakanda together. Till the next time I decide to get on Al Gore's internet and share my thoughts on this thing that they call price action. It's your boy, Timothy B. Rogers Sr., a.k.a. Aranya Grande. That's just big spot if you know how blue spin. Yo, y'all be safe out here, trade streets, man. Gone.